Welcome to Pulling Money Trading. Okay, now it's 5th, the 30th, 2025, 9:30 a.m. The opening of the New York Stock Exchange. All right, we like to trade into the opening of the New York Stock Exchange, like about an hour into the New York Stock Exchange. Okay, so in my last video, I was down in the market, right? I had a trade open, right? I won that trade and I actually added to that winning trade, right? Managed to bring the account back into the win. However, some bad trades yesterday. Market made a big sell down, missed opportunity that the broker took me out of. A lot of stuff went down, so now I'm way down. Okay, so not sticking to the rules, just a lot of stuff happen and I'm way down. I'm down, but I'm not out. Okay, so let me explain to you what happened. Going back to the trade history. Okay, so right now the account balance is like $3.27, right? And yeah, it's not impossible to bring it back up, but it's gonna take a lot of skill and a lot of patience. So let's see if I can turn this account around from $3.27. Okay, let's see what's gonna happen. So let me right here. So yeah, so this was the 25th, like around the 26th, right? So as you can see, this was the trade that I was in over the weekend, last weekend, right? And this was a winning trade. So as you can see, I profited like 770 pip from one of the trade. Another one I profited 407 pip. Okay. Afterward, I managed to got in a trade. This was a sell trade, right? I got out. I got stopped out actually. 33 pip. I think this one went way down, but I was stopped out. Got some losses in between here. This was a buy trade. Got out at 95 pip. I think this one went into profit. So I was using, got some losses in between. Got some profit here. Sell. Right. Got out 300 and something pip for these. Got some losses in between here. Got stop out of some of these. Right. So I was doing fairly well until big sell down happened. Let's go to the chart. Okay, so go over here. Right, so this was when things started to go south. Right, so let's zoom up. Right, so market went down, big sell down in this area. Right, I think some of the sell trade, let me see the price for the sell trade. Um, these are buy trades. Right, so right here where I profited $3.50 something, 3.10. Price was 13,343, somewhere around here, 13,343 right here. Okay, so let me show you right here in this area. Let me go over to trading view because I can use the tools to actually show you on trading view a little bit better. Okay, 13,343, so somewhere here. Now these I was doing some back testing with all this, so this is nothing to be concerned about. This was just some back testing I was doing to check something. 13,343, right, somewhere here. Okay, right here. So as you can see, right, I got in right here, 13,343, perfect trade. Market went down. Buyers was in control of the market right here, pushing the market up. Sellers took over, break this area and this area, then came back up into this area where I entered the trade. So perfect timing trade, right? So the strategy work, but to be honest, um, there's some psychological aspect of things working against me with this strategy and as well as the broker. I'm not sticking to the rules as I should. So some of the trades, I'm missing out on some of the trades, right? Some of the trades are not going into profitability because I'm trading on the 1 minute time frame. So some of the trades are not going um to TP and I'm not using break even or win-win, right? And some of the trades I'm not getting into some of the trades because of the broker and because of not just plain old not taking the trade. So let me show you something, right? Look how far the market went down from this area, right? Market went down all the way down 1239 pip, right? And this risk was about, like, let me show you, right? This is a trade right here. I actually profit two sell trade. I only took 300 pip, 600 pip each, and the market gave me 1200 pip. So this is why, one of the reasons why I'm not in front of the market, because when the big winners come, I'm not maximizing on a trade like this, right? Which is giving me 1239 pip. I only took 600 pip when I could have taken 1,000 pip, which is $10, right? So with these two trades, right here. I could have gotten $20 easily out of the market, and I only took 6. Okay, now let's look at the risk, right? So the profit, I was trying to trail the stop, right, for these, and I got stopped out, which I don't like to trail stop because of the same reason, and I don't like to use win-win or break even because of the same reason. Because when you try to trail stop, the market will make a deep pullback, take you out of the trade, and then go all the way, right? So if I had just leave these 2 trades without trying to trail stop, right, for 1,000 pip each, I would have gotten it. Okay, so that's the reason why I don't like to trail stop, and I don't like to use win-win and break even, because most of the time it work against me, right? So anyway, stop loss was 13,024. Now because I was trailing stop, it is actually showing me where it took me out of the trade. So it's not showing me the original risk for these 2 trades because I was trailing stop. So it is just showing me where I got out of the trades. And I don't normally trail stop. So you see, I was using some stuff that I don't normally use in my trading just to try and be more careful with the account and all of that, and it worked against me. Okay. But when you look at it, right, this risk right here was just 38 pips. So I'm not, for this trade, I wasn't even risking that much. So I could have leave the trades, both of them, to TP, or the market just come back and I lose 38 cents. So it's not like I'm risking a lot of money on these trades. So I don't even need to use break even, win-win, or trail stop, because it's not like I'm risking a lot. Okay, so these are just some minor errors which cost me, right? So this is one, right? Let me show you something else, right? This trade right here, $1.83, which is a sell trade, right? Perfect trade, was in the trade, same thing. Had to come out the trade because my account was running low, because I got in some losing trade, chasing the market, right? And when the winner came, which was this trade right here yesterday, right? Sell at 13,742, right? 13,798. So this, I was risking probably 52 pip for this trade, 56 pip, right, to make maybe like 100 pip. Okay, and look what happened. Let me show you. 13,742 was the entry price. Right, so here, right, so I got in right here, 13,742, right here. I got into the trade right in this area. Reason being, same principle, right? Same principle apply. Market break this structure right here, right? Market break this structure. Buyers was in control, pushing the market all the way up to this point, creating a structure right here. Market breakdown, right? Market breakdown, this area, pull back into this area. Now, 2 things can happen in this case, and this is the reason why I'm saying some of these trades, I know this strategy work, but for some reason if I'm in an opposing trade, normally I'll just hedge against the trade, right? Take the loss if the trade go in my favor. If the opposing trade don't go in my favor, I just take the loss and I should be in the trade that the momentum is with. Or if the trend change, I got in on the opposite side and got taken out on the opposite side, which would work. Anyway, let me show you what happened with this trade. Same thing with the last trade. Okay. So right now it's more of a psychological thing going on. So it's not a strategy, it's more like a psychological thing, right? Going on right now. 42 pip, right? To make 1000 pip, right? Look, boom. 1000 pip would take me all the way down here. So I would still be in this trade, right? So the market went down. Let me show you. The market went down 533 pip. Pull back, make a deep pullback, and it's still going down. So this is where the price is right now, right? This is where the price is right now. So the market is still going down. This is where price is right now, right? And still 622 pip in profit. So I would still be in this trade, and the market is still going down, right? 1000 people would take me to here, right? Market is still going down. 622 pip, and look, I ended up got out at 183 pip because, right, my account balance was running low and I need to take some profit, right? And I was in some opposing trade, which was these two buy trade, and my analysis was showing me that the market had a potential to reverse, right? So these two trades right here, 15 cent each, I ended up cash out this trade, right? So these two trade, I ended up move my stop to win-win, got taken out of these two trades. The sell trade is still running. Okay. Another thing I want to bring to your attention, right? Go down to trading view. So it's not the strategy why I'm behind in the market, to be honest. It's more like psychology at this moment. Psychology. And as I said before, the broker, right? Let me show you this trade right here, right? Perfect trade. And I'm going to explain it to you, right? Market came down all the way down from here. Big sell down to here, right? So once the principles are being observed, once the principles are being observed, right, the strategy works well, but rules have to be observed, right? This strategy don't work well with break even and win-win, and I've been trying to use that this week and it's not working, right? It's costing me the high paying trades, right? And when the losses are coming, I'm not, my hedge is not working because I'm cashing out $1 or $3 when I should be cashing out $10 or $5. So it's like I'm defeating the strategy basically, right? So let me explain this what happened right here, right? So once the strategy, as I said before, is being observed, right? Once the strategy is being observed, right, it's gonna work majority of the time, but you have to get in the trades. If you're not in the trades, when the market is moving, then it's not gonna work, right? So simply following the strategy, getting into the trades when the strategy is showing you should get in, right? That's the key. You're gonna be in some losing trade when the momentum is against you, but once you take the other side of the trade, it's gonna cancel out those losses, right? So the market made a big drop, right? Create a structure right here. Buyers now came in the market, pushed the market up, right? From here to here, okay? From here to here, right? Sellers came in the market from this point to this point, right? Creating a level right there. Buyers intersect sellers right here. Now, when I woke up yesterday morning, right, all this had already happened. But because I know that this was showing me that there was a buyers are taking control of the market, because as you can see, they are breaking levels, right? They are breaking above levels to the upside, right? So because of that information, when I woke up, right, where did I get in the trade? Let me see if I can remember. Right, I think it was right here, right? So when I woke up, the market was right here. All this had already happened, but this was information that I had, which was showing me that buyers, when you look at it, all these areas. So trading is about discipline, following your strategy, following what the chart is showing you. If you're wrong, you get out at a loss, a minimum loss. If you're right, you get paid. So trading is pretty much about discipline, sticking to your strategy, not adding or subtracting anything. Okay. So the fact that I was including break even, win-win, trail stop last week, right? That pretty much was working against me to the fullest. So look at this. Same thing, right? Same thing was going on in the market, right? At this era. So this was how I got this trade. And I'm gonna show you. I'm gonna show you, right? Intersection right here. Buyers intersect sellers breaking above this point, creating a level right here. Okay, market came back. Same thing was going on, right? Same thing was going on. So to be honest, once you look at price, follow price action, it's gonna tell you what's going on in the market and what is likely to happen next. Okay, it's gonna tell you what is likely to happen next. So all you have to do is just stick to your strategy, right? If you're right, if you're right, the market pay you. If you're wrong, you lose a small sum and you move on. Simple. So if you look at all these markers, right? Now, this is the trick part of this thing. I'm gonna explain it to you, because with trading, this account is not so much making money. Yes, we want to make money, but it's all about teaching as well, sharing knowledge, learning from mistakes, making the mistakes in real time live trading, right? Showing you all the mistakes, trading errors, so that you can learn from them, right? Because we are only human, so from time to time, we are going to make human error, right? And that is the thing with trading. We have to try to eliminate human error as much as possible, because that is the key to trading. Trading the market mechanically. Whatever the market is showing you, that is what you should do, because the market, only the market alone can dictate where it is going to go and where it want to go. So even if there's a fake out, I'm going to show you what a fake out look like, right? Even if there's a fake out, once you're trading correctly, you should be in the right trade, going in the right direction. I'm gonna show you why. Because of this information right here, which is showing me that buyers are in control of the market right here, right? Sellers was in control here to here. I'm just putting in all this to show you guys something. Buyers took control breaking above this level right here. Okay, this is a entry right here. It's not the best structure because a lot of activity is in this area, but let's say this is a entry. Okay, because buyers intersect sellers right at this point right here. See where the intersection happen? Price intersect price, right? Right in this area where sellers push down the market from here to here, right? From here to here. And buyers took the market up from here all the way up to here. So once you plot these price points and follow them to the T, it should work. Okay? You're gonna have losses. Every single trading strategy have losses. But the key is to follow this strategy, win or lose, and you should be in front. Right? So look what happened now. Because I have all this information from here all the way up showing that buyers are taking control of all these areas that sellers was in. Now if you look, this big push right here, uh, right, this big push right here, took out this level right here, break above, and this took out this level. Now if you look below what's going on, right, this area, all these area is above this, which is an indication that price is trying to go higher and higher, trying to go up. Now, because I have all that information, right, I don't know what is gonna happen in the market. So you have to use a mathematical term, right? Let me put in some text so that you can understand what is going. Right? So this is the key information right here. Right here where buyers intersect sellers. Right? This is the key information right here, which is showing that buyers are trying to take the price higher and higher. Remember, I told you before, when I wake up, all this has already happened. Right? Now, if you realize price tried to came back, come to this area right here, and it couldn't. Right? So there is still a lot of pent up buyers in this area. Chances are when the market come back to this area. Let me show you. Right. So as you can see, price was trying to come back to this area right here and couldn't come back to this area. So even now, there is still leftover buyers possibly in this area. Right. Now, Right. So let me finish things up. So because I have all this information, right? This was already gone, right? So this era, you should have an entry. This is an entry right here, right? This is our entry. So I was trading 1 to make 5. So this would be 250 pip. Okay? Right. And this is the second entry because you use the known to find the unknown. This is a structure. This is also a structure. Right? Let me put the lines in place. Right? So that you can understand what's going on. Come on. These are both structures. Right? Because there's no way for you to tell 100% which one of these structures the market is going to respect or which one is going to push the market up. Okay? All right. So this would be 50 pip to make 250 pip. Okay? Watch what happened. Now the market came back into this area right here, which is the first structure. Push the market up. Right? This would be 12571. Probably 125 pip. Market went up 125 pip. Sellers came in, market was moving sideways. Sellers came in, break below this structure right here, and then voila, came back into this structure right here. Right? So this was where I got in the trade. So I was just explaining how I came about this trade. Right? Now look, 44 pip. Right? Entry price 12,314.